this is what the pattern traders do. They'll take a stick that measures the distance from the top of a double top to the bottom of the neckline and see where that value goes. So we're just going to go approximately. This brings us back into this region. I don't really trade patterns like that, but I mean, they do work. So I mean, I'm not just going to invalidate them because I don't use them. But here we go. Double tops are famous, and this is where this one would lead to the 40,000 area. So I'm just using that for approximation for the pattern traders. I'm starting out with a fresh chart because I wanted to draw what I shared back in March live, a fair value gap on the weekly time frame. So I'm going to draw that right now. Here's the fair value gap. I shared this all over different telegrams and discords back in March when Bitcoin had that first weekly rejection wick, and I started looking at volume divergences. So this is a fair value gap. Nobody believed me that this was going to come to this area, but then it hit right here. The first time we went to 56K area. The first time we went to 56K area right here on this long green wick, nobody thought that was going to happen. Wicked up, 60K support, went back up. I made a video when we went back up. Here we go. Another red wick. Came down, retraced this. Got close. Everybody's like, this is a higher high. I'm like, this is a higher wick. So this is good, this rejection area, but this fair value gap, I was telling people I'm not even thinking about DCAing or anything for the drive back up until we can show this fair value gap as support. If it is support, which is 51K area, 52K area. This is an order block right here at the 50K area. So you have different confluences for all different type of traders. Also, this is a support and resistance zone. You can see that we launched from this consolidation right here. And then again, at the 44K area, that was a resistance zone. So let me just show you how I trade. I'm a pullback trader, and I will use the same strategy of pullbacks across all time frames, and that's why I never FOMO into trades. It's just a game of support and resistance. If you just break it down to that, order blocks, fair value gaps, all those things, it's still just support and resistance. So I use the EMAs as my pullback. The 50, the 200, and also I use the middle bias of the Bollinger Band, which is the 20 period moving average. I use those as my pullback indicators. So you see price went up, got rejected out of the Bollinger Bands. Rejection out the Bollinger Bands, we made a double top structure, come back to the fair value gap. But you see this fair value gap is between the 20 moving average of the Bollinger Band and also the 50 EMA, this dark blue. So for me, when I'm trading pullbacks on mostly time frames, and I'll show that in another video, I'm looking for the 200, which is this light blue, 200 EMA and the 50 EMA. And that's when I start looking for buys or sells, depending on what trend we're in. If we're in a downtrend, I'll be looking for price to gravitate between the 50 and the 200. And these EMAs keep moving up. So right now we have a rejection wick on the Bollinger Band. This weekly close, we still have, what, a day and a half till this weekly close. So I don't like red bottom wicks. You know, I always say red bottom wicks get filled, and we can see that over here. Red bottom wick got filled, red bottom wick got filled, red bottom wick got filled. Right here, red bottom wick that we just filled. So if this is a long wick, I would say we can fake back up, correct up, very high possibility, come back down, fill that wick. You know, everybody's calling for 50K, which is the fair value gap. You know, a lot of people are calling for 40K. Currently, the 50 and the 200 EMAs, this will be my optimal entries. I'm still short-term bullish. I mean, short-term bearish, long-term bullish. I will like to end the video with giving what I think is high probability to happen. For bullish case scenario, I'll give my thoughts, what would be maybe called hopium at this point, just for us to go straight back up. We would need to use this support, which is acting strong right now. You see this wick on the weekly time frame. We see this green wick, and we saw this red wick. This is all in the same area. So if this weekly candle closes, I can see the price, you know, relief bouncing, fake rally up, you know, whatever anybody wants to call it, correcting back up for the downtrend to the lower targets. But we would need to clear, in my opinion, I'm not happy. 62K is a key level. I drew a fib the other day. I might make another video and do it, a daily time frame fib. 62 was a golden ratio area, and also 62 was a key area on a weekly fib as well. I just don't want to overload this video with too much, but we need to get over 62K. But for the short term, let's say on the 4 hourly chart, daily chart, we need to flip this 56K. Right now, it's acting as support. If we go a little bit low, we definitely need to get back above that and turn it on a small time frame into support and start launching right here. But until we get up above 62, start making closures over there, like let's say on a daily time frame, I need a daily time frame closure over 62 for us to be like, oh, we're going at least to go think about having enough momentum to take out these highs, or we could just go back in range. But if you are starting a DCA, have a specific swing in mind. Like me, let's say I wanted to DCA in this area. What I would do, me personally, I would use very small amounts in my bag, maybe 20%, have an equal buy ready around this area. And this isn't financial advice. This is just what I would do. So 20% of the bag right here, I would put 20% of the bag down here at 50K, because I believe this will be a very strong relief bounce right here, which could take you into profit. If you want to keep on DCA, and let's say that scenario did happen, if you want to not take profit and just be like, okay, I just don't want to be day trading or swing trading right now, I just want to try to DCA for the new all-time highs that we're looking for, I would cut my DCA off right here. If this was to happen right now with these EMAs, this 200 EMA on the weekly time frame, where all this support and resistance was, all this consolidation, like that would be my cutoff zone. And I would have about 40% of my bag ready to drop right here so I could rescue my capital, or become into profit before I just close everything down. But, I wouldn't just go a 50% bag trade right here, 50% bag trade down here at the 50 area. But yeah, this is not financial advice. I just want to give a little hopium analysis, I guess, and also what I would like to see if 56K, this area that we've been in where the wicks are, and if this weekly candle body closes right at 56 area, what I would like to see for us to start moving back up. I hope this helped anybody that's into day trading or swing trading or trying to understand the market that we're in. Peace.